So, power of 3, aka AMD cycles, aka OHLC and OLHC. So what do all these things mean? First off, power of 3. What is the power? What is the 3? Power of 3 refers to accumulation, manipulation, distribution. AMD cycle is also accumulation, manipulation, distribution. OHLC is open, high, low, close. It refers to a candle on how it opens, makes a high, makes a low, and then closes. Same for OLHC, open, low, high, close. That would of course be a bullish candle, and open, high, low, close would be a bearish candle. So that is what it stands for. Now, how can we use power of 3? And what do these things actually mean? So just to give you some context right here, this is both for Forex, both for indices. This is also for commodities. This is for everything in the market. Every single market you can name, that is what it works on. Every single one. First, I will go into the sessions, how we can use them on sessions, and slowly and gradually I will zoom out, and at the end it will make the most sense. So if you follow along with the progress, then it will make a lot of sense. At first it might be a little bit confusing, but that's why I'm here to warn you, because allow that confusion to be there, and then at the end it will all of a sudden make a lot more sense. All right, if we dive into the 5 minute and we look at a London open, so at the London kill zone right here. At what time does a London kill zone start? At 2 a.m., right? That's what we touched on. Then we have that candle for London open. If we zoom in a little bit more on that candle right there, that is the open of the candle, right? And when we refer to open, low, high, close, open right there, the low of the candle, high, close. And if you look at the top left right there, you'll see the exact numbers that we're using right there. That is the open, high, low, close. And if we have a bearish candle, on this candle, for example, it would be open, high, low, close. For this candle, we now use the open of that candle, because that is the open of our London kill zone. If we now zoom out again, what is actually happening here? Where is the end of London kill zone? This candle, this 455, is actually the end, because on this candle, we already start at 5 a.m. So the open of this candle is your end, and the close of that candle is also your end. So just for simplicity's sake, I will mark the open of that candle, because that is your ending right there of the London kill zone. So if we look at what happens right here, what do we see? Open, high, low, close. That is the exact same thing that we are seeing on every candle. So if we now zoom in, and I'm going to zoom in on a specific candle. For example, this candle right here. Open, high, low, close. This candle could have very well been this London kill zone. That is the exact same fractal candle. So if I now use the FX market sessions indicator again, and inside the settings I turned on the candle display, what can we see? We can see an exact candle right here. This is what it would look like on a 3-hour candle, because the London kill zone is 3 hours. So in those 3 hours, what happens on the lower time frame is we open, we have a high created right there, we have the low created, and then we close. That is the basics of it. Now, of course, we also want to go over power of 3 and AMD cycles: accumulation, manipulation, distribution. What is accumulation? What is manipulation? What is distribution? Accumulation happens at the opening range. Let's first go over manipulation. Manipulation is the top right here. If we are expecting a bearish candle, for example, like this, then the top, this wick, is the manipulation. So everything above the open right there is the manipulation. Of course, if we were expecting bullish prices, then the bottom wick would have been manipulation, because that is where price is manipulating. It is manipulating who? It is manipulating retail traders to go long right here. And then it's doing the exact opposite right there. Then what is our accumulation phase? Our accumulation, if we now drag our Fibonacci from this high, from the top of the manipulation, so the top of that wick, back to the open, and we have a symmetrical swing. So you have 1, 0, minus 1. So these are the Fibonacci settings right here. Very simple. And you have a symmetrical swing of that manipulation. This is your accumulation phase. What does that mean? When you want to get involved in the market, ideally you want to get involved in the manipulation phase. If you can't get involved in the manipulation phase, or you want to wait a little bit longer, then this accumulation phase, this is where you want to get involved. So after we come below the accumulation phase, that is not where you want to get involved anymore. At least not looking for shorts. Then what is our distribution phase? Our distribution phase is what we just saw on manipulation, the top of the wick to the open. But now it's the opposite. It is that bottom of the wick to the close. That wick right there, that is your distribution. What is it distributing? It is distributing profit that it made from this manipulation right there and this accumulation, and right there it is taking profit. Who is taking profit? Well, you can argue an algorithm, central banks, etc. institutions are taking profit right there. And who are they profiting off of? Opposing liquidity. Again, retail liquidity. With retail liquidity, I'm of course referring to retail concepts, bigger hedge funds, etc. that are trading retail concepts that are getting trapped right there. So right here, liquidity got trapped into the market. Us, or not really us, but the central banks, etc. institutions, they are in the market right there. So they, for example, are in the market right there. Where do they want to target? They want to target at opposing liquidity. What is opposing liquidity? Well, we trapped in long traders right there. Now we want to trap in short traders so we can take longs. We can do the exact opposite and we can take profit, which is aiming for those lows right there. And eventually we slowly start to take profit right here. And that is why you are seeing these moves up right there. And that is exactly the reason why we move higher even from here. So accumulation, manipulation, distribution. But we don't just apply the power of 3 and we don't just look at accumulation, manipulation, distribution everywhere. There needs to be context behind it. In this sense, and the reason why I started on the sessions and applying the power of 3 there is because right here, it will maybe be a bit confusing. But once we slowly zoom out now, it will make a lot more sense. So right here, if I remove this Fibonacci, this again is our London session. Now, what does our London session come into? It comes into liquidity. What kind of liquidity? If we zoom out on the 1 hour right here, it is taking liquidity above a 1 hour high right there, coming back to fill in this fair value gap completely with that order block right there. And what does it do right now? On the 5 minute, we can see we are trapping long traders and then we are dropping off. And then where are we heading? If we now zoom out on the daily, what can we see? We are reaching for that previous day low into a daily fair value gap, which is a very clean target to aim for. If we now drop back down into the 5 minute, long traders trapped, we are in a short position, aiming for, again, liquidity right there. And we have a daily fair value gap right there. And we have the previous day low right there. That is our distribution. And can you see here the importance of those skill zones, the importance of time right there? Because right there at the end of London, we create the low of the day. Now, if we now go into the next session, for example, we go into New York right there. That is New York end, and the open of New York is right there. What can you notice I notice the exact same thing. We take some liquidity there. We first have that move down, that manipulation phase, the accumulation right there. And then afterwards, we have distribution right there. Distribution at what? At a fair value gap right there. You need to remember what we talked about. Fair value gaps, order blocks are also liquidity. And we have the exact same cycle. We have the manipulation, the accumulation, and the distribution. So if I pull up the FX market sessions again, we now see the exact same thing with that candle, the manipulation, accumulation, their distribution at what level? At an opposing premium array. Discount array to a premium array. That is our distribution right there. Our power of 3. But what if we now zoom out a little bit more? Here we are on the daily time frame. We just mentioned this daily fair value gap with that previous day low right there. What do we see on the daily candles? Open, low, high, close. We see the exact same thing. What does it reach into? A discount array. What is it aiming for? On this Thursday, we have an open, low, high, close. What is happening there? And why is Friday dropping off? AKA our thank God it's Friday. Right there. An opposing premium array. Again, on these individual days, you have accumulation, you have manipulation, and you have distribution on each individual candle. So if we dive into these individual candles again, the time you would use can be just that candles open off of the daily time frame. What I mostly do and what most people do is you will use the midnight open of New York right there at that open, that little up candle right there. That is 0000. That is New York midnight open. That is what institutions refer to because they want to be buying below the midnight open on bullish days. The same exact thing we just saw on the London session, same exact thing as we saw on New York session. So right here, when it comes below that, right here, this is where we want to get involved. And then right here, what do we see again? If we now draw a Fibonacci again, from this low to that open, this is your accumulation phase. This is where you want to get involved, to target those potential highs, to target these highs, and to target even the whole weekly range. Manipulation, accumulation, and then at the end of the week, what do we see? Distribution right there. This is the top of the wick because this is applying it to every single day. But if we now zoom out and go to every week, what do we see? Manipulation with the accumulation. So accumulation, manipulation, distribution. We see the exact same candle. And if we mark that open again and then go into the daily time frame again, we want to be buying below that open if we are expecting a bullish week. Can you now see how it is starting to make sense and how it is fractal? We went from sessions to days to now weeks, all the same stuff, and to now even months. Here we are on the monthly time frame. If I now go onto the monthly time frame and I use this volume imbalance or even this fair value gap right there, what do we see? We see the exact same thing. Open, low, high, close. Open, high, low, close. If we now go back into the daily time frame, and where does the month start? Right here. And where did this month start? Right there on that day. Can you see how in both months, this month and this month, we are first having that manipulation. Then we have the meat in the middle, aka the trending days. If we refer this back to a weekly profile that we just saw on this weekly, right there, what does this create? It's just your weekly profile within it. But a weekly profile, you would more define it, you would more zoom in. So if we refer back to this monthly candle, this is the exact same as a weekly profile. Just you can say a monthly profile. You would have Monday consolidation, your Tuesday high of the month right there. Then we have Wednesday trending, Thursday trending, and then eventually right here when the month ends, we have your thank God it's Friday setup, and we have the close of the month right there. That is the exact same thing. And the exact same thing happens here. We have Monday or Tuesday trending, Thursday, Friday right here caps the month. So at the beginning and the end of the month, you want to be careful with getting involved. And then in a new month, you want to be careful trying to long this, because this could very well be your manipulation phase. And then that meet in the middle where the trend is, the same for the week. I always say if you want to get involved in a trend, mainly focus on Tuesday and Wednesday and maybe Thursday. But again, remember the weekly profiles. Thursday is TR/end. The trend could very well end. The same for the month, the same for the day, same for the sessions, all the exact same. So right here, if we now apply the weekly profiles, we can see the exact same, right? If we go back to the weekly, we have that manipulation, that accumulation, distribution on each and every candle. So if we mark the opens, that is exactly where we would want to get involved, above the open of that candle. If we then go into the daily, we can see again when we are coming into that premium array, we want to mark those opens and we want to get involved above those opens. And if we dive into then sessions, we want to use the exact same thing. And that is a very good guideline using these opens on how we can get involved at the best prices. Now you can see that I am not just taking any candle open and any candle close, etc. There needs to be context behind it, and that is why I didn't start off the A to Z guide with power 3, here you go, just use this. No, I started off the A to Z guide with PD arrays, higher time frame, because understanding this monthly context, understanding the weekly context right here, that we are coming into this fair value gap, that is exactly what we need to understand first, because then when we have that open and we sting into a premium array, because we know we saw that premium array coming, and then we have our accumulation, our expansion, and then with an opposing discount array, we can now have the distribution. That is very important. You're not just taking power of 3 because there's a power of 3. No, you need to combine it with PD arrays, and that's exactly what we went over. So every single power of 3 I mentioned here, it was combined with a premium or a discount array. It wasn't just any power of 3, it was in combination, in context. These concepts need to be working in harmony. They are all working in harmony, and that's exactly what it makes so beautiful. So right here, we went from the sessions to the days, which forms what? The daily profiles we went over. We went from the days to the weeks, which forms what? The weekly profiles we went over. And then we went from the weeks to the months. And you could even create your own monthly profile. Study this. If you want, send me markups directly to me on Twitter, not through DM, because my DMs are a bit full. If you just send me the tweet itself or an Instagram story itself, I'll see it and I'll be able to take a look at it. All right, perfect. Thank you.